Good morning. This is George Tkaczuk with Know Your Options Inc. reporting to you from the CME Group trading floor in Chicago. I want to talk about two things this morning. We'll talk about the state of the current equity market, and then we'll talk about some possible trade ideas. Okay, for now, the market is still in a correction. Although we saw a pretty good bounce on Friday, it's going to be a day one of our rally attempt, and today we're getting a little bit of a follow through, although the volume's a little bit light this morning. So let's take a step back. October 26th, we thought we had a rally attempt. It undercut, it failed. November 9th, same thing. Looked like the market might have hit a low. Market failed at those levels. Now last Friday, the NASDAQ hit about 2810. Big rally, big volume to the upside. Could this be the start of a new rally? Well, not until you see some follow-through confirmation. You should just treat this as a bounce. In fact, this morning, the NASDAQ's right at about 2892, where it's butting up against its 10-day moving average. That pretty much has served of an overhead resistance in this downtrend. So I'll wait to see how the market plays out at this level. If it can get through this level, we might have a little bit more upside. It wouldn't be the start of a new rally, but just a little bit more upside. If we fail here, it might be a good point to sell into this market. Same thing with the S&P 500. Right now it's butting up against its 200-day moving average, right at about 1380. If it fails at this level, this may be a great place to sell some E-minis, meaning all we're experiencing is a little bit of a bounce, a so-called dead cat bounce. Now, what if on the other hand, in a few days down the road, we do see this rally continuing, we see some big volume coming in, and we get the so-called follow-through day where when the indexes goes up about 1.5% and greater volume than the day before. You need to have some stocks in mind to get in on these if this rally is for real. So we're seeing some pretty good setups in some of the biotech names. One of them being Biogen IDEC, symbol BIIB, corrected about 18% from its high from about 157 down to 135. And last Friday, it actually bounced off its 200-day moving average, which is about 137, and some really good volume. And we're seeing a little bit follow through this morning. So that might be something you want to keep your eye on because it's showing some good technical bounce, and also there's a pretty good story behind that. They're waiting for FDA approval of their oral drug for our multiple sclerosis called BG12. So that might be the catalyst that shoots this stock higher. Another biotech stock, Regeneron, symbol REGN, also Friday, it reclaimed its 50-day moving average and huge volume to the upside. Again, this is telling you technically the stock didn't correct too much, only about 15%. So you could use this 50-day line, which was at about 150. It's trading probably 159, 158 right now. So if one wanted to take a stab at that stock, you could use that 150 as your sell signal if it fails from here and if the market fails. Another big cap biotech stock is Amgen. Amgen has a few drugs that continues to make headway, increasing market share. We have Xgeva, Enbrel, Prolia. So we have a few drugs going forward. And again, Amgen also recaptured its 50-day moving average and big volume. So these are some setups. These are the type of stocks you should be looking at, stocks that have been able to reclaim their 50-day moving average, or where we saw a good strong bounce up its 200-day moving average. And again, you only want to play these if we do see some follow through. But right now, even though we're having a pretty good bounce this morning, the market's still in a correction. Let price and volume be your guide. If you see volume coming into the upside, maybe we'll have a start of a new rally. Have a happy Thanksgiving to you and your family. This is George Tkaczuk with Know Your Options Inc. reporting to you from the CME Group trading floor in Chicago.